Chinese real estate giant Evergrande, which has been on the verge of collapse since last year, has once again failed to pay another outstanding debt on time. Please note that unless otherwise specified, all figures mentioned below will be in US dollars. On December 3rd, Evergrande issued an announcement on the Hong Kong Stock Exchange, saying that it had received a demand for a $260 million guarantee obligation. But given the current liquidity situation, the group is uncertain whether it has sufficient funds to continue to meet its financial obligations. On December 6th, another one of Evergrande's interest payments, approximately $82.5 million, was not paid by the end of the 30-day grace period given earlier. This is the second default after the first case of its overseas debt. On December 3rd, the Guangdong government said in an announcement that it had interviewed Jiayin, the controller of Evergrande Group. The government said at the request of Evergrande Group, a group has been sent to Evergrande to try to resolve the crisis and supervise the enterprise's operation. In another announcement by Evergrande, the group said its failure to meet its guarantees and other financial obligations may result in creditors accelerating the maturity of future debts. This will most likely result in the group to cease payment of future interest and debts. Currently, Evergrande has a total debt of approximately $300 billion, including $20 billion of outstanding US dollar debt. If Evergrande fails to find a feasible repayment plan in time, the group may go down like a stack of dominoes. Evergrande's crisis can be dated back to September 2021, when the group said it has been actively working with its financial and legal advisors to assess the company's capital structure and liquidity position, explore all feasible options, maintain active communication with its offshore creditors, and develop an offshore restructuring plan. In the meantime, Jiayin himself has raised funds by selling his personal shares and assets, including 2 private jets, luxury mansions in Hong Kong, the United States, and China, and more. It was reported that the total amount of funds raised by selling his own assets was around $15 billion, which was mostly used to pay the interest on US dollar bonds, the redemption of Evergrande's wealth management products, as well as funding the group's general operation and employees' wages. On the other hand, Evergrande also reduced its holdings of Evergrande Vehicle by 900 million shares, involving a total of $400 million, which reduced its share from 72.89% to 63.84%. But they could still not avoid the inevitable. When Evergrande defaulted again on December 3rd, the People's Bank of China, the CBRC, and the SFC responded to the public by issuing a Q&A session, emphasizing once again that the crisis of Evergrande was mainly due to its own mismanagement and bold expansion. They claimed that the overseas bond market is highly market-oriented, and the short-term risks of certain real estate enterprises will not affect the financing in the medium and long-term market. They also said the spillover effect of Evergrande's crisis is manageable. When Evergrande is going down, more and more Chinese real estate giants have gotten into bigger trouble as well. Established in Hong Kong in 1999, Kaisa Group develops real estate projects mainly in large and medium-sized cities in mainland China. According to Hong Kong media, on December 7th, a group led by investment bank Lazard proposed a formal relief for Kaisa's $400 million bond, which defaulted the previous Sunday. Kaisa Group has the second largest US dollar bond, just behind Evergrande, and it was the first Chinese real estate developer that went default on its offshore US dollar debt in 2015. Kaisa Group has another $2.705 billion of debt maturing in 2022. On December 6, Sunshine 100 China Holdings Limited, one of China's top 10 real estate companies, announced that it had defaulted on a senior note due December 5th, involving $170 million and unpaid interest of $8.925 million. On December 2nd, China Yuan announced in 2 notices that it cannot repay $940 million of wealth management products that are due, and a $650 million debt that triggered a cross-default situation. According to Wind Data, China Yuan is going to have 2 US dollar bonds maturing in January 2022. Earlier on October 4th, real estate group Fantasia Holdings also went default on its $206 million debt. Fantasia Holdings was founded in 1996 and headquartered in Shenzhen, led by Zheng Baobao. Her father, Zheng Qinghuai, was once a prominent figure in the CCP, while Zheng's eldest uncle, Zheng Qinghong, was a former Chinese vice president. Besides those listed above, 9 other Chinese real estate groups have also defaulted in the past months, and in the coming months, at least 14 Chinese real estate companies may not be able to repay their combined $4 billion debt. Taiwanese financial expert Edward Huang said the real estate crisis in China is like dominoes. With Evergrande being the first domino, Chinese real estate companies will fall one after another. He said in an interview that the total debt of the real estate sector in China could be as high as $5 trillion. He also mentioned the overall housing prices in China are starting to fall. While people's purchasing power is weakening, China's financial structure has also worsened, thus forming a vicious cycle. The Chinese Communist authorities are naturally aware of Evergrande's situation and the subsequent impact it may have on China's economy. That is why the State Council is going to hold a central economic meeting in the next 2 weeks in order to stabilize the market by giving some positive signals. Prior to that, on December 3rd, Chinese Premier Li Keqiang stated that he supports lowering the reserve requirement ratio in a timely manner in order to increase money liquidity. On December 5th, the People's Bank of China also decided to lower the reserve requirement ratio of financial institutions by 0.5 percentage points by December 15th, releasing a total of about $188 billion of long-term funds. After this cut, the weighted average reserve requirement ratio for financial institutions will be 8.4%. Researcher Ren Chongdao from the independent think tank Tianjun Finance pointed out that the two councils' immediate reaction to maintain the stability of the financial system shows the urgency of the crisis brought by these real estate groups, and the situation is worsening. While compared to the debt crisis, the Chinese government is more concerned about the social stability in China. This also means that the government will very likely not use its foreign exchange reserves to help Evergrande out of its debt, but put stress on Jiayin and the company to repay their own debt in the face of international impact. Economist He Qinglian wrote in Radio Free Asia that both the Japanese and US media usually know the difference between public and private Chinese enterprises, but at critical moments it becomes blurry. People mistakenly believe Xu Jiayin's political connections will help him with his problems. The lesson foreign investors should learn from the Evergrande case is that when investing and raising bonds in China, it is important to distinguish the nature of state-owned enterprises from private enterprises that claim to have political connections. He Qinglian said, "A state-owned enterprise is a state-owned enterprise, where the government owns the capital and the proceeds go to the national treasury. A private enterprise with political connections is not under the care of the Chinese government, and the benefits go into the private pockets of political figures. Xi Jinping will never treat the pockets of retired and current standing committee members and the families of Jiang Zemin and Zheng Qinghong as the national treasury." She also mentioned that the Chinese government has been fighting a tough battle to defend its foreign exchange reserves and maintain a safety line of 3 trillion yuan since the second half of 2016. Therefore, it will not use these foreign exchange reserves to pay off the international debts of any business firm, despite the fact that the firm allegedly had good political connections. In order to control the domestic risk, the CCP officials has long planned ahead. Sources close to the matter said that at the request of the authorities, many local governments have set up working groups for the hundreds of stalled projects by different real estate companies in more than 200 cities. Local governments have also been ordered to organize accounting staff to review the financial situation of Evergrande Group and other real estate developers, urging the construction units to resume work and production, and setting up enforcement teams to monitor public discontent. Some local governments have even asked Evergrande to transfer the revenue from the uncompleted projects to a government-regulated escrow account and to allocate part of the funds to Evergrande suppliers so that construction can continue. If Evergrande wants to use the funds, it can only apply to the government escrow account. As for the projects that have just started construction, the local government has asked Evergrande to cancel all of them and refund the buyers, while the land will be taken over by the government or other qualified real estate developers. However, one of Evergrande's insiders told the Chinese media that since the capital gap for resuming construction is relatively large, even if the local government department intervenes, the period for all parties to agree on a solution will be long, and only projects with money in the account have the conditions to resume work. Moreover, he said Evergrande owes too much debt in the current period for many projects. Even if the local government provides partial capital assistance, it can only support for a period of time. When negotiating, the construction unit did not expressly state its position due to the presence of concerned departments. But once it comes time to sign the agreement, both sides refuse to make any concessions, and there's no way to reach an agreement and resume construction. As Chinese media has reported, currently not many projects of Evergrande have resumed work, and most of them are paused or suspended. Some netizens even said many of Evergrande's projects that are advertised to the public as having resumed work are actually done by sending 3 to 5 people to make some noise and pretend to be working. The local governments are also helping the real estate company to cover up and lie in order to calm the public. Therefore, at present, many domestic projects in China do not have a date of delivery at all. However, the real crisis has not yet arrived, as most of these projects from defaulted companies were expected to be delivered in 2022.